Ladies and gentlemen, I think we can begin right now because the clock is already ticking. Good morning. My name is Tian. I'm a host of World Insight with Tian on CGTN China Global Television Network. It's my great honor to be able to sit here together with this distinguished panel to discuss a profound question about China's economy. This session is a joint session between World Economic Forum and CGTN. We are discussing a big topic, one on everybody's mind, China's economy, the big rebound. 我们今天讨论的话题是
We're going to talk about China's economy, the big rebound. So this is a question mark. As you can see, this is a topic we're going to talk about today.
China's economy has always been a growth engine for the world's economy. However, recently we have also seen it has its own sets of challenges, just like many economies around the world these days. So are we going to see China's economy in a big rebound? The forum has put forward this wonderful question with a question mark. I don't have the ability to answer it, yet this distinguished panel will provide us more insights to help you answer that question yourself. So I'm very honored to introduce the panelists sitting here today. I'm just going to go through their names according to the order provided by the organizer. Carrie Chen Kai-yi, Chief Executive Officer and co-founder of Avant. Good to see you. Nice to meet you. Great to see a women leader sitting in the panel talking about the economy. It's important. Thank you
so much.
我们可以鼓鼓掌啊。
Please give a round of applause, please.
Professor Gong Ke, President of the World Federation of Engineering Organization. Professor Gong, good to see you. Professor Clifford Kapchan, Chairman of the Eurasia Group. Good to see you, Professor. Professor Aswa Prasad, who is the professor from Cornell University, working a lot on the Chinese economy. Good to see you. Last but certainly not least, 我们在座的很多人对他都
I believe you're all really familiar with this face.
reviews about the Chinese economy for all of us around the world. Dr. Zhu Min. Professor Zhu is now the Vice Chairman of China Center for International Economic Exchanges. Good to see you. Thank you. I think the best job the moderator for this panel could do is to shorten as much as possible the words she said and let these experts speak. So I'm going to do exactly that and kick the ball to Professor Zhu here. So how would you answer that big question mark? Briefly, 2 minutes from you first.
Wow. It'll take us 3 hours.
The state of the China's economy at this moment.
Well, I think overall, the economy grows well, right? The Prime Minister just mentioned yesterday the second quarter will be better than first quarter, and overall we will be able to reach around 5% of GDP growth rates. I think this is really, really important, right? But there's still a lot of comments, a lot of things people observe with different angles. For example, people see consumption is rebound, but it's not as strong as people expected, which is very understandable because after 3 years, COVID, right, and people have to repair their balance sheets and be cautious. So you will see the consumption rebound, but not as strong as people expected. Real estate is a rebound, but also not as strong as people expected. Real estate dropped roughly sales 24% last year, and also investment dropped 14% last year. It's a big drag for last year's GDP growth now. So this is a rebound, but it's not very strong, right? But this is a big structure issue because, first of all, there's a big oversupply. China have a total real estate supply of roughly 1.7 billion square meters per year. And in fact, the demand dropped to roughly 1.3 billion now because population, and peak, and also because per person, housing reaches 4 square meter now. It's pretty high. So it's a slowdown. So you will see the gap between the supply and demand. So how can we digest this 400 million square meter capacity? It's a big issue. So you will have a long-term structure change, but also on demand side structure change. Because before, most of them demand a first-time housing buyer, but now they only account half. Last year, it's only 6.5 million couple get married. Assume everyone buy a house, apartment. Right? Assume they buy 100 square meter. So it's only account 650 million square meter, which is half of the whole demand.
Right.
So another half demand from the upgrading need. So upgrading do have a different need for the housing. So kind of market not necessarily to match with that. So the real estate sector will have a long time to restructure, go through the whole thing. I think the real issue for macro is to make sure the real estate will not develop into a systemic risk. Since last year's experience, I'm comfortable to say I don't think real estate will become a systemic risk. The only thing is we'll go through long-term structure change. I think the third issue is trade. Number is not very good. Everybody complains trade is slippery. One thing is global growth is slowing down, right, which is directly impact on China's trade, but also geopolitical also played a very important role. China used to be the largest export to the U.S. Today, the fourth, just in a few years, right? You can see the whole thing's change.
Right.
So this is also the long-term work gradually, see how things evolving. So how the China will deal with those issues? That's the most important things. Personally, I don't think real estate sectors and trade will have a cyclical strong rebound, as you mentioned. I don't think so, because this is a long-term issue. So real need, we need to find a new growth engine. Indeed, we did. So, for example, we take the manufacturing digitalization as a main drive engine for the growth this year, which works actually. China have the largest manufacturing sector for the whole world, account of 30.2% total global manufacturers, equivalent to total U.S., Japan, Germany, and South Korea. Those four account only roughly 29.7%. So manufacturing is really the strength of Chinese economy. I think we want to make sure the manufacturing work well and upgrading on the value chain. So digitalization is the key issue. And the CHAP GDP helps a lot to digitalizing the manufacturing. You will see those things move very fast in the past, will even be faster in the future. The second big engine is a carbon neutrality transformation. It's a huge, right? We expect to see in 2050, we'll invest roughly 180 trillion RMB into the total investments. And now with the solar power cost per kilowatt down to the 2 cents of US dollar, we'll be able to use the solar power to produce hydrogen. So that's a change in the whole renewable energy now. And also develop the new, like a solar industry, and China accounted roughly 19% of global solar equipment capacities. Like a windmill, 15 top windmill company, China accounted 10. Like EV, total Chinese electric vehicle in stock is more than in Europeans. So this engine works well. So really, I observe the whole economy in a structure shifting and restructuring. So you will see volatilities, but that's okay. Overall, things will match, will move things forward.
Timeline-wise, if you could just one sentence or two, how long will this take from your perspective as an economist?
Well, I think manufacturing digitalization
That's a
and
trillion-dollar
carbon neutrality
question.
will take up to 2060.
Okay.
No worry, for all your life, not for mine, because I'm alive very shortly.
Well, I think with good healthcare, we're going to all live very long, Professor. We're going to see the structural reform of China's economy. Excuse me. Going to you, Professor Prasad, you've been doing research a lot on the currency issue and on how financial services and sectors likely to have an impact on the overall economic growth. Tell me more from your perspective.
So, Professor Zhu very nicely linked up the short-term as well as longer-term growth prospects of China. And context is really important here. China is now a $19 trillion economy at market exchange rates, and it's hard to envision an economy of this size and complexity continuing to deliver 8 to 10% growth. But even if China delivers modest growth, it's important to keep in mind that for the world economy, it is important that China grows, but also how it grows. Now, we've seen China already accomplish a significant amount of success in terms of its goal of rebalancing the economy, relying less on heavy investment-led manufacturing growth and trying to move up the value-added chain, which again is going to be good for China in terms of sustaining more robust manufacturing growth, but also making it much more environmentally sustainable, a topic that Dr. Zhu is making very important contributions to. In addition, the services sector has become a lot more important, and we've seen consumption playing a much bigger role in the economy. Now, all of this received a bit of a setback during the COVID period, and even over the last year. I think, and Dr. Zhu alluded to this, private consumption has been somewhat weak, and last year, private investment was quite weak as well, with public investment driving most of the investment growth. And this poses some challenges, and I think it points to what needs to be done in order to accomplish both the short-term as well as the longer-term objectives. And as you suggested, Tian, the financial sector is really important to this. What I think China really needs in order to generate better growth in the short term, but also the medium term, is to have a better financial system that allocates resources in a way that is much more efficient to the most productive parts of the economy. We've seen a lot of credit going out of the banking sector and from other parts of the financial system, but whether it is going to the parts of the economy that can most effectively generate productivity growth and employment growth remains the question. And that's not necessarily the large state-owned enterprises that are into heavy manufacturing. It's more the small and medium enterprises. It's more the enterprises in the services sector. And that's really important as you think about China's longer-term growth prospects as well. Because with a declining labor force and with what I think is a desirable reduction in the reliance on investment as we look to China's longer-term growth, we really need this economy to generate better productivity growth. And that is going to require a more efficient financial system. Now, as we come back to the short term, certainly there are some risks out there, including geopolitical tensions, where the property market is going. But I think these can be managed. What is really important right now is to ensure that the private sector has the confidence it needs in order to sustain this economic expansion, for households to go out and consume, for private businesses in particular to go out and invest. And what I think that's going to take is a combination of short-term macroeconomic stimulus, both monetary and fiscal, but also signs from the government that it is going to be serious about encouraging private enterprise, and will have a set of policies in place that will move the economy in what I view as a more positive direction.
I like this panel. Everybody's so straightforward. Like it. Let's go to the questions that you say can be very crucial. That is the confidence of the private sector and also some of the other areas of the Chinese economy. On that, we have a wonderful panelist sitting here. She can tell us what is the body temperature. Ms. Chan, you run a private company. Of course, it's running not only here on the mainland, but also in Hong Kong and other places in Asia. What is the body temperature you are feeling right now? And when these two distinguished professors of economy and finance talk about the solutions, do you agree with them?
Yeah, I think coming from the angle a little bit, we are a biotech, food tech intersection company, and we are still we're not a big company yet. So so there are several areas that I would like to share a little bit. So first of all, we are using kind of like medical and science to apply it to food tech, and we need to find a more lower cost, effective kind of solution. At the beginning, the strategy, of course, looking at China, the supply chain and everything, can make ourselves a little bit more advantageous among our peers in the other parts of the world. But as we start looking at some of these, material supply and equipment supply, indeed, the price is actually not as budget friendly as we see. We see that the cost of doing business and operation and material actually is slowly creeping up in China. So we actually, in our case, we still looking at China for our supply chain, but then we also need to look at other part of Asia, for example, southern part of Asia, to basically compare, right? So I think that is one of the aspects that we kind of feeling it quite like closely. The other is that I think if we believe that innovation startup is actually the driving, like the steam engine of economy in the mid to long term, then I think then the private capital market, like venture capital and also private equity, is super important. There are a couple of challenges here for us that we experience. One is that for a lot of the deep tech, it takes quite a bit of time to do R&D to get commercialized. And our sense is that generally Asia and also including China, investors, even though they are supposed to be early stage investors, they are investing in high risk projects, but they are very conservative comparatively. So we are still seeing most of our shareholder majority is still overseas, like international investors. So I think that is something that it takes a whole ecosystem to change the mindset a little bit. It's also supply and demand situation in the VC and the PE kind of capital market as well. And the other side also is the valuation. And we have been always like curious about giving the major market that we can assess here in China. We're talking about food product like meat consumption top in China, right, across like pork and different kind of type. But then it does not, even though our technology is very much like on par and some of our areas very unique among our peers, but valuation does not reflect that. So valuation actually translates to the amount of the capital we can raise. That also translates to the R&D we can, how much we can input into the R&D, how much pilot facility we can invest in, how much people we can hire. So that's kind of like a circle and related to each other. So there's a few things that we're experiencing here. And last but not least is the human capital. I think there have been saying that like some young people, they are lying flat. So I think that, you know, the work-life balance and mission-driven kind of thing is, these are the people that they are the upcoming major kind of labor force, as well as when they make money, they will also spend. So I think then how to make sure that they are equipped with the right scale in view of all of the AI and all of the things we operate. Mm-hmm. We need a lot of talent in the bioprocessing and biological kind of research. And how do we find a lot of them so that we can support innovation in various areas? I think these are the three aspects that we feel quite a bit like upfront.
Yeah, I can see the sincerity coming from Ms. Chen. She's pretty much goes through all these important components of running a business, whether it is supply chain, competitiveness, or the funding, where does this come from, or the human resources, isn't it? Well, I think these are all very relevant points. Many of those sitting here today are also business leaders of their own fields. I'm sure you have also similar points of view, but later we're going to have some space for you to also raise your questions. Just very briefly, I would love to have our two professors working on macro economy to respond to what Ms. Chen just earlier touched on. The issue of supply chain competition, the issue of funding, and also the issue of rescaling human resources. Very briefly, everybody, maybe 2 sentences when we move on to the other sectors, which are also very important. One, geopolitics, diplomacy, one on technology later. So let's quickly, Professor.
Well, the quick answer is, I think everything Madame Chen said is correct, because yes, you run business, you run those issues. I think you have to take it as a given. The supply chain is changing, the labor cost is increasing, right, and the geopolitical tension is uprising. You know, as a business leader, you have to take the whole thing. I mean, it's real. You have to take your strategy to adapt, to deal with those things. I think it's number one. Number two, I would like to emphasize one thing for everyone in this podium, particularly for the business leaders. I mean, don't overlook the growth number, the trend, right? Don't look about the 0.1% growth up or growth down. Don't overlook this, all real estate have a crisis, this company is a go bankrupt, whatever. I mean, look for the whole picture. The future is in the structure change. It's not the trend. When you're looking for the trend, you're looking for the mean. You try to beat the mean. The future, there's no mean, because everything is a structure. So what you need is to find opportunity in structure change, and the market is huge. I think that's my response to Madame Tseng's questions. Also, well, my thought for the business leaders in the audience.
Food for thought. Later we can debate about that. Thank you. Professor Prasad, briefly, 1 or 2 sentences. Thank you.
That's a very rich set of perspectives from the real world, and I think it points to 2 things. First, there are enormous challenges out there. I mean, this is a time of huge uncertainty in China, in the world, a huge amount of volatility, but there are also tremendous opportunities out there. Professor Zhu referred to how digitization is potentially leading to a transformation in the consumer experience, in the way businesses can integrate their supply chains and make some of their business processes more efficient. So the key question is whether as a business, as an economy, you position yourself in order to take advantage of those opportunities.
Right. Of course.
If I add the 20 seconds, we need to seize the new world, the future, then leave the old world. I mean, those structures is inevitable. So who will be able to catch the fast-run train? Who will be the winner for the future? That's the whole thing. That's the competition.
I hope it's everybody sitting here because we are discussing this very important topic here. We're going to catch that train or that plane. Going to you, Professor Kapchen, to make things only more complicated. Geopolitics and also diplomacy. Of course, you're an expert on the Eurasian region. One thing, of course, is the impact of geopolitics on businesses worldwide, not just here in Asia, but elsewhere in the world, where you come from, North America as well. How do you see this role, the role of geopolitics now playing in the overall answer we can provide about China's economy, a big rebound? I just love this title, by the way. So I'll throw that to you, Professor.
Well, the degree of the rebound, it'll probably be a rebound of some size, but it's affected also by China's international environment.
Right. Rule of the house, by the way, before you go further, is you see the other 2 professors, they not only illustrate on the challenges, they also provide some kind of solutions. So if I could, right? Professor Kapchen, I throw that big question to you.
I'm an American. We don't do solutions. So, look, China's economic power is the foundation of China's role in the world. China's diplomacy, and we see it daily now, its influence comes from its economic heft, its economic sway. If we look at diplomatic history, briefly, powers traditionally develop a real strong economic base before they develop a strong army. And I think China has begun to do the latter, as great powers do, but right now is in kind of the prime of its economic influence. Everything else being equal, I think it's kind of obvious, but worth saying that a peaceful international environment is critical to China's continued success, continued growth. So let's just take a brief tour of how that looks. I mean, certainly the U.S., my country, is the biggest issue, where we have decoupling and a huge brewing issue over Taiwan. I think if those are diplomatically handled well, and I think they can be, the situation, the posture for China's growth, the context, is quite strong. On the other hand, if there is, I think it's unlikely, some kind of a crisis, and the risk of sanctions, U.S. sanctions on China grows, then the trajectory, I think, has to be looked at again. I think people would be reworking their assumptions, but I think that's quite unlikely, thankfully. In Europe, the European Commission is quite hardline on China, but the European Commission doesn't make policy. Policy is made by the member states. The UK obviously is involved in the EU, but the UK is the closest to the US, the hawk, the sort of European hawk. Then the French are in the middle. The Germans are much more concerned with their trading relationship with China, and I think less of a risk. Moving on, I think the Middle East is a place where Chinese business and Chinese capital has really, really grown in influence, and astoundingly so, in the Gulf especially. And the manifestation of that was the really kind of breathtaking Chinese ability to broker a deal between Saudi Arabia and Iran, which is the first deal in the Middle East during my lifetime that was not brokered by the U.S. And just to kind of round out this tour, which I think overall is quite impressive for Chinese prospects, in Latin America, trade with South America, Brazil and Argentina. You know, China is by far the leading trading partner now, not so much in Latin America, but in the Southern Cone, China's done tremendously well. And finally, across Africa, since the 90s, China's economic relationships have really burgeoned and sort of gone beyond, at this point, big infrastructure, BRI projects, to much more sophisticated Chinese lending, which I think will probably be the wave of the future. So overall, it's not smooth sailing and only smooth sailing, but I think the overall picture for the context of China's growth, which my colleagues have described, I think is rather encouraging. Thank you.
Thank you, sir. You did provide the answer, and you moderate that a little bit. But we are all nervous about next year, geopolitical-wise.
It should be.
Some elections are going to take place. So what would that mean for business community and also for those economists who are studying what's going to happen? See, Professor is having a deep thought right now.
Yeah.
So without providing necessarily the exact answer, so what are some of the areas that you are observing so that our business leaders could also watch out with you, Professor?
So if I was a business, I would look at a few things. First, what William Lai is saying. And I know the Chinese government and the U.S. government are looking at that. He has a background of being more independence-oriented than President Tsai. It's one thing to campaign. It's another thing to win and implement. So what's that policy? Secondly, what are the postures of the U.S. and Chinese governments towards the election? Does the U.S., I think the answer is going to be yes, allow the Chinese candidates to conduct transit visits as part of their campaign? That's going to be a real flashpoint in Beijing. It's going to be a rough patch. The third is what kinds of interferences, if any, does the Chinese government undertake in the election? Both sides have well, I'm not sure that the U.S. has a strong interest in who wins. We'll at least leave it that way. So if you keep track of those potential flashpoints and watch for their outcomes, depends on the kind of business you're in. If you're running money every day, it's important to watch them and see what the volatility is around them. Mm-hmm. If you're running a more structural corporate type business, what you would not want to see, obviously, is this blow up into some sort of a crisis as we approach May and after May. And if it does, then you're going to want to start to allocate capital differently than you had before that happens.
If I could borrow your wisdom a bit, Professor Zhu, sorry to knock on your door again.
I was listening to you carefully.
Yes.
I don't think he wants to do this, but go ahead.
I see everybody is not volunteer for this question, so I go to you now. That there is a problem. I think economies, businesses are facing that tremendously. The rhetorics are louder than realities.
Yeah.
And in political decision-making process, it seems that rhetorics are playing a bigger role rather than the realities on the ground. For example, about trade. Even though trade has been an interesting issue, but we see the numbers are going up. Last year, just an example. This year, we don't know yet. So how do you see that, well, putting Professor Kapchan's good advice in the backdrop?
Well, I think you correctly point out the rhetoric is much higher than reality. I think that's the issue. So for the business community, the key issue is you have to understand what is the noise. You have to screen all the noise to see the real reality, and basis on the reality, form your business strategy.
Right.
I think this is the issue. If you follow the rhetoric, I mean, you can go nowhere, right? I think that's the first issue. The second issue, so we'll see from this meeting, I see it's very interesting. The attendants have a strong view that globalization is still on. the world is separated. So a lot of anti-globalization, a lot of the argument before say globalization is dead. But people here say, no, globalization is not dead. Because you need the productivity, you need the efficiency, you need the low cost. So you have to make the world work together. The globalization means specialization. The specialization means the interdependency. So what do you mean de-risk, right? So the de-risk will dramatically reduce the efficiency. So I think in that sense, it's what the business community hold a view of a globalization and push that direction. I think the reality will push back the rhetoric noise. I think that's also a very important issue.
Right.
The third issue is, don't see all those tensions. We see Blinken's visit is constructive, right? We agreed quite a few things. When we also signed a few deals looking for the area we can cooperate together. So you will see things sort of stop and go, things moving that way. So what I'm trying to say is looking for the long term, the globalization is the trend. Looking for the long term, US, China got to work together. Because we live only on one planet, right?
It seems that you are giving, all of you, are giving another layer to our topic today. Today, our topic is one limited to China's economy. But actually, should we ask a bigger question? Will rational thinking and actions a big rebound? I think that will be an important one for all of us to answer. Professor Prasad, very briefly, and then I go to Ms. Chan. This is a tough question. Nobody can escape. So, Professor Prasad. Yeah.
So Professor Zhu has correctly pointed out, building on what Professor Kapchan said, that we need to separate the noise from the policy. But I think we are at a dangerous juncture, especially in the context of the US-China relationship. The geopolitical relationship was always a complicated one because that is intrinsically a zero-sum game. If China is going to gain a little more influence, the US is going to lose a little influence. So it's hard to avoid conflict there. But the economic relationship was for a long time seen as a more positive sum game where both sides could gain, and that provided a counterbalance to the political dimension. Now, unfortunately, we are in a circumstance where even the economic relationship is seen as a zero or even negative sum game, where one country feels that if the other country gets ahead in terms of certain technologies and so on, that it could have a negative effect domestically.
Yeah.
So I think we need to get to a more constructive place. And again, as Professor Zhu pointed out, it's good that the two sides are talking. Secretary Blinken was here, perhaps Secretary Yellen will be here next month, and she, in fact, has made the point that a significant decoupling between the two economies would hurt both countries, because ultimately when these two large economies are at loggerheads on economic issues, it makes it much harder for businesses to operate in an environment of certainty, and every business needs a less volatile and more predictable environment. And I think even though the noise may not have any real effects, I think it is having an effect, and at a time when the US economy is cooling down, when China is facing some growth challenges, I don't think it's particularly helpful. So I hope dialogue at least will prevent these tensions from heating up even more, even if not de-escalating.
Yes. Ms. Chan, also, please respond.
Yeah, I think where we feel that we kind of facing some dilemma, like we involuntarily need to consider where do we find our investor, for example, to support our venture. So either it is too sensitive or just preparing for the worst, right? Do we go to raise, and do we have a very Chinese investor on our cap table? That is the question actually pop up in the board meeting.
Yeah, so what's your answer to that?
So then we need to derive something which is again increase our cost of running operation. Is we need to put some corporate structure in place that we can, if we can prepare for the worst and can still benefit in the near term. And I think that makes things complicated, but we still need to live with that.
You know, the reality of the world makes everybody a strategist, isn't it? Yeah. But let me go to you, Professor Gong. You are an expert on telecommunication, new technology. That's another area we should never ignore. There's so many things happening right now. Artificial intelligence, which has been intensely discussed during this year's forum, By the way, wonderful to see the forum is back in China and for this communication. But Professor, how do you see the new technologies are likely, and innovation and policies related to it, people's applications related to it, the market reorientation related to it, likely to influence China's economy, a big rebound, question mark?
Before talking about technology, I would like to back to the big rebound. Actually, I don't like the word big rebound. I think the Chinese economy is in the course of recovery. Big rebound, behind this word, there's some unrealistic predictions to the recovery, because we could not underestimate the negative impact of years-long pandemic, which I believe has exhaustively consumed the public resources in many aspects. So we need some time to recover from that crisis. Big rebound is not that realistic. And another issue is that, just mentioned by Dr. Zhu and other previous speakers, change, transformation. That's more important than growth. Because I would like to bring this issue into a broader context. We call it the sustainable development. We talk about geopolitical tension, the startup, because we need to recognize the common challenge to all enterprises, to all governments, to different countries. That is to transform our world into sustainable development. Because even if we could not transform our world within this century, we may not able to sustain on the earth.
Yeah.
So talking about sustainable development, that is not just about decarbonization, not just about environmental protection. That's about a healthy development in 3 dimensions: economic growth, social justice, inclusion, and ecological development. So we are working for the World Federation of Engineering Organizations, and our mission is, we call it engineering for sustainable development. And we find the essential challenge of the sustainability is to coordinately to have a development in those 3 dimensions. And we have to find a tool to promote the coordinated development in these 3 dimensions.
All right.
Yep.
Then, in the same policy I apply to everybody here in the panel, I would ask you what those tools are, because you are supposed to provide answers as well.
The solutions. Yeah. We find the digital technology is a tool, could help us to coordinately have economic growth, environmental protection, and social justice.
举个例子呢?
Yeah. At first, I would like to see
Maybe an example.
technologies is a cluster of technology, not single technology, that include integrated circuits, telecommunication, internet of things, blockchain, big data, cloud computing, and artificial intelligence. For example, take artificial intelligence as a concrete example. There's a lot of evidence to show proper use of AI could increase the efficiency of production of services and so on and so forth, and to reduce the carbon emission. For example, we talk about renewable energy. Renewable coming from wind and solar. They're non-stable. So we need some method to estimate the change of the wind and the solar, the sunshine, and to adapt the demand and supply, energy demand and energy supply, and AI make good help. And that helps our power grid more resilient and more adaptive to the demand. But what I want to say is that in the WFU, our federation, we raised a big word. We called it digital capacity. Because every country, every enterprise, every society need to increase the digital capacity. Digital capacity, we mean the capability to use digital technology in specific use cases and to solve the real problem. For example...
So where is China now?
In some field, quite good. For example, smart grid, power supply, artificial intelligence, big data, Internet of Things is well used in our power grid in the past years, and that helped us to dealing with the pandemic, very difficult time, because people could not go to the fabric, but we have to keep power supply. So that is a big help. And also in automobile industry, big change has happened. EV has mentioned by Dr. Zhu, and that is a very positive trend we see.
There are a lot of discussions like that Professor Gong have just mentioned in China. The question is higher quality growth. Now, Professor Zhu, is it going to be led by some specific sectors, such as electronic vehicles, as you mentioned, or is it going to be a huge paradigm change that is needed in order to look at the overall picture of the Chinese economy?
Good point. I think it's a paradigm shift, because a high quality growth means a few things. Digital is number one, green is number two, inclusive is number three. I think these are most three important things for high quality growth. And it's everywhere, because digitalization is happening everywhere. You think about that. And the green is happening everywhere, right? So it's not leading by one sector. Yes, electric vehicle lead to the battery, and batteries are also important today. But it's really everywhere. Retails, e-commerce, and the manufacturers, shipments, and the research, particularly area for science, right? So it is really everything. I will say in 10 years, digitalization will basically in everywhere in the whole world, and the gradual green, right, in 2040, 2050, you will see it's all, sort of a carbon zero world now. So this is everyone's business. This is the whole society, holistic. I call really a paradigm shift.
Yeah. You see where China is toward that paradigm shift.
China's moving
20%, 40%, 60%, if I could just use some numbers.
Well, the number is hard, but China is moving very fast, number one, in terms of digitalization, right? If you're looking for the Chinese e-commerce, looking for the data, looking for the software industries, and moving very fast. Particularly in the manufacturing, if you go to the company to see how much digitalization in manufacturing is absolutely amazing. It's really amazing. Now we got the U.S. restrictions on the chip, which also constrained on the computing power side, right? So, but we're going to build a computing network, to plan for bringing all the computing power together in China, provide a computing service for all the different companies, like Madame Chen's company even can link with this platform. So I would say digitalization goes, and the green really goes very fast. I mean, this is incredible. For example, this year, China will install roughly 120 gigawatts solar power, which is roughly more than 45% of the global total capacity. I mean, this is incredible, right? And the windmill as well. So China's EV sector also moving very fast. So green energy, green transformation move very fast.
I want to yes, please.
I think talking about the digitalization, China is in the very fast pace of the digitalization. In the past 3 years, during the pandemic, the 5G telecommunication infrastructure has grown very fast. And now China has, I believe, about 4 million base stations of 5G mobile telecommunication is already working on the big part of China. Almost all middle-scale cities are covered by 5G. That's a very important digital infrastructure that will promote the faster industrialization.
I thank you
not the industrialization, digitalization.
Digitalization. I thank you, Professor, for bringing us update, because I think everybody sitting here, after being away from China for a few years, all want to have the real picture. And thank you for providing all these important information. I just want to make things a little bit more complicated. Therefore, I call on Professor Kupchan before I call on Professor Prasad. Technology. Once again, it goes back to some issues complicated. You know what I'm talking about. So how do you see this momentum of technologies pushing the economies forward, but at the same time, the other side of the coin is that there are more complicated geopolitical diplomacy issues related to technology, applications of technologies as well. Of course, standards, trade policies could all relate to this. Professor.
Okay, thank you. Big question. First, I'm going to do a solution real quick. So during U.S.-Russia, when there was a diplomatic relationship, there was something called the Gore, Vice President Gore and Prime Minister Chernomyrdin had a commission that had all sorts of subcommissions. And it was too bureaucratic, but it ultimately worked. So as far as communication, that would be my proposed solution, and I offer it seriously. On the technology front, I do most of my work on AI right now.
Good for you.
Regarding technology and the geopolitics of AI. I'm not these guys are engineers. I'm a political scientist, but I think artificial intelligence is easily the biggest technological revolution in my lifetime. I think it has the potential to just overwhelm other revolutions in the sense that it grows and builds on itself so quickly. I mean, these large language models are sort of self-learning and self-training.
Indeed.
And the rapidity of change is breathtaking. Now, that is mainly good because of the productivity that will enhance. And Goldman Sachs and others have done the numbers. I don't need to tell you what the numbers are. We all know them. It also comes with risks which are going to be very, very difficult to control, in my view, because the tech companies know more than anybody else about what's going on, and they have a lot of money, probably more money than anybody else, and they have a profit model. So, go figure how you're going to really get regulation. I think one final point. The thing that I think I really do worry about, and I kind of get paid to worry about this stuff, so I worry about it. But the issue is kind of ultimately about AI and weapons, and the danger that it could apply if rationality doesn't win and competitive wins. It'll really cost us if the sides compete on military applications of AI, because then if there's a breakout on one side, you get a classical, again, political science, dilemma where there will be pressures on the other side to do a preemptive strike. And that's the kind of future that we should all know that we don't want.
And I guess part to that solution is importance of communication, especially quality communication, at least to establish some kind of mechanism, as you said.
And of rationality.
Indeed.
Yeah. Can I add one thing on
and then I go to
technology and the geopolitical risk issues? Obviously, in everybody's mind, it's a chip. The chip war is the key issue, right? I mean, last night I just heard a professor from Tsinghua told me China uses roughly 1,100,000 A100 chips in terms of artificial calculating. I mean, this is a real thing, but only produce 50,000. So we buy 95% of 1 million A100. So the CHIP Act obviously will put a tremendous to the Chinese, artificial intelligence and the chip sector and digitalization. Clear. I mean, you have to admit that. That's very true. But there are several ways. Number one, now, China will develop its own chip industry. We have to. American force us to do. Okay, before we open the door, buy from US, now we have to produce ourselves. China today can produce 28 nanometer chip on the commercial level. You will say, well, 28, it's way ahead. But 28 nanometer chip is a big market chunk because most of market implication use 28 nanometer chip. Right. Now we move to 14 nanometer chip, and we shortly will be able to commercially produce the 14 nanometer chip. And we move value chain quickly, I observe. I think this is very important. And then meanwhile, it's very interesting, all the companies, major companies, heavily invest on the 3, 4, 7 nanometer, whatever capacities. And because the de-risking, they want to build their own capacity, there's an overcapacity issue in chip industry. Clearly, in 3 to 5 years, China will enter the market and export 28 nanometer chips, 14 nanometer chips, even smaller chips. The market will collapse. You will see things with overcapacity. And China imported $300 billion chips. If China don't import those chips, because China can't, right? And all those companies increase their capacity by, and really very high speed. The whole sector is in big trouble.
So what we're talking about is redundancy, right?
But
that's why we're saying division of
labor. So what the China's way is to try to develop our own chip sector, but also I want to say, I just mentioned, we try to build our own computer power platform and networking. Bring all the computer power together so we'll be able to facilitate what we need for various company need on the computing power. So I think the systems building is a very important infrastructure. Yes, the US Chip Act put a tremendous pressure on Chinese chip sectors on the digitalizations. We'll find our way out.
And that's just one of those examples when we're talking about technologies. Professor Prasad, briefly also.
So before he diverted to a slightly gloomier perspective, Professor Zhu very nicely articulated where we should go, both the Chinese economy and the world economy, and we talked about all the technologies that could get us there. I think there are other elements that are necessary to move in the right direction. Governments are going to play a critical role. Certainly technology is wonderful, but I think what we've learned with the variety of technologies is that leaving technologies to itself without guardrails can create a lot of concerns and problems and lead us down into very dark paths. So effective government regulation is going to be important. Governments also play a very important role in providing a stable environment for these technologies to flourish, and that's true both at the domestic level and at the geopolitical level, where we could have many shared benefits rather than go down the path of fragmentation that Dr. Zhu referred to. But going back to an earlier comment I made, I think the financial sector is going to be very important as well, because you can have good policies in place, you can have the right sort of incentives in place, but you do need financing, a point that you alluded to earlier. And getting the financial resources going in the right direction is crucial, but it's equally important to have an inclusive financial system to make sure that all these benefits that are out there don't end up being cornered by the economic and political elite and are spread much more broadly, so that there is a sense of agency that everybody in the population has, and that we don't have a fragmentation of societies either within countries or across countries.
Yes. So I have finished my job almost, but my questions are not as smart as those coming from the audience. They are all practitioners, they are researchers, and they are thinkers. So we have less than 5 minutes. Can I just collect the questions, maybe collect 4 or 5 questions altogether, and then we throw it to you? You can give us some choppy answers, if that could be an option. Thank you so much. So questions, please.
Here.
Okay. I see several hands already. Here. This side, no? Okay. 1, 2, 3, 4. Any more? Let's just go over there. One more. Okay, let's just go with these 5 questions. Only these 5. Okay, let's go.
Hi, Bloomberg News.
Very briefly, the question.
Sure.
Thank you.
Question for Professor Zhu. You mentioned the challenges with the consumption recovery and the real estate markets. Wonder if you have any specific policy recommendations in terms of what kind of stimulus or policies China should take to address these growth challenges?
Stimulus policies coming from the government. Okay.
My question is more around the psychology of the Chinese people. So I think China's got to where it's got to through sort of fearless growth, but seems like there's a ton of fear that the COVID situation has created. So what can we do across government and businesses to reduce the level of fear in the population, take more risk?
How to deal with fear, confidence, what can stakeholders do? Okay, good, thank you. Next one, please.
So for Dr. Zhu and Mr. Prasad, I think recently the economy is under big strain. Although there is long-term, a very promising structural change, there are youth unemployment, all kinds of these very negative economic data. What do you think should be element of a basket of policy support to support the economy in the short term?
Okay, similar to the stimulus, right? But in a different way. Okay, thank you. Next one, please. We have one more in the back.
I've got one question for Zhu Min. Is there ample space in China's fiscal and monetary policies to foster China's steady growth in the second half of the year? And what's your outlook for China's rebound and recovery in the second half of the year?
Okay, so I think similar questions, right, about policy, how to support. This lady, please. Yeah, maybe let's...
Lourdes Casanova, Cornell University. My question is, what about central bank digital currency? I have not seen it anywhere, and will it help or will not?
Okay, digital currency and the financial innovation, whether that will play a role. There's one question at the back. Earlier we promised to let that, just very quickly the question, please.
This person wearing white at the back.
For Professor Kupchen. So I really appreciate your perspective.
Yeah, so your question is, please.
What do you think is exactly the rational pace for us to developing artificial intelligence specifically? So because rationality is an
rational pace of artificial intelligence. Thank you so much. All right, so sorry to rush because I want everybody to have a chance. Thank you, appreciate it. One is about, I think, policy-wise. What can governments do? Let's just generally say talking about government, and then we focus more on China government, maybe central government, and even local government. Professor Zhu, Professor Prasad, I think these questions to both of you.
Yeah, I think there were a lot of expectations on Chinese governments to have more stimulation policies. I don't think this is real. I mean, China have a very high debts already, and also on the current situation not necessarily is a more structure, not you don't have to have a more macro. So the policy will be more structure. I think that's the first issue on this. On the consumption side is the whole issue is, for example, give more coupon with local authorities, one thing, encourage people to consume more EV, go to the rural area. But most important thing is 2 to 3 things. Number one, and make sure the income growth rate is higher than GDP growth rates for this year, macro level. Number two, continue to improve social safety nets in terms of pension, healthcare, and all the other things. Number three, and speed up for the people getting the hukou in the urban areas. I think this is 100 million people, and if we can move these people into the city, it will be huge consumer power. I think on the consumer side, it's really on the less issues. On the field, it's really a good issue. I understand there's a lot of field that I think is really the issues. We need a communication. We need to really take the fear away, rebuild the confidence. This is the most important thing. Everything started from fear. Fear is really the key enemy for everyone. We need to deal with this issue seriously. So this forum actually bring people together on purposely try to deal with this issue of fear.
Yeah, and we compare notes. Sometimes can reduce fear. Professor Prasad.
So rather than any panicky macroeconomic stimulus measures, I think focusing on the medium-term growth measures that I think are going to support more sustainable growth is, as Dr. Zhu correctly pointed out, really important to rebuild, sustain private sector confidence, and that I think is a key to both boosting growth in the short term and promoting better growth in the long term.
Yeah. Okay. Let's go to the technology question. AI. Professor Gong, maybe very briefly, 1 or 2 sentences, please.
Instead of pace, I would like to talk about the directions.
Okay, very briefly.
One direction for the AI development is regulation. We need global consensus as a base for the global regulation of AI development.
Global governance issue.
Another thing is to promote AI useful for production, for economic growth. That means from chat to product. That's another direction I'd like to mention. Yeah.
Right. Financial innovation or any other issues, Professor Kapchen, very briefly respond to any of the earlier raised questions.
Let me respond to the artificial intelligence one. I think what we need the most is sobriety and fear. At least in the West, the tech companies, in my view, is the Wild West. They're kind of broken loose. And so one way to get at them is national regulation, but I don't think there's the expertise or the money to do that. Another one is international. Way behind the curve. If the UN developed kind of a supervisory body that could spot, detect, and interdict dangerous uses of AI in weaponry, that would be great. U.S., China, and I'll end with this. Another area where bilaterally we really need to develop norms. And most importantly, I think we need to develop some kind of an arms control, like the U.S. and the Russians, arms control. I think we need kind of a U.S.-China arms control arrangement on what's okay and what's just not okay in AI. Now, that sounds ambitious, but we're going to be in a whole lot of trouble if we don't do it.
Yeah.
I'm done. Thank you.
We need to do it urgently. We all agree with you on that. Absolutely. Ms. Chan, as a practitioner in the field, as a business lady, how do you see some of the earlier questions raised? What would you want to focus on?
Yeah, one I would like to react is actually on the point of fear, right? And I think the fear coming from we don't know what will happen kind of next year or something. So no conclusive solution here, but something like where from our perspective, something that is verbalized as a bottom line, policy or direction, talking about like describing what will be the approach under different scenario, it might help us to get a sense about, okay, what we can prepare ourselves for. So that will help alleviating some of the fear, although not everything. We know that is all driven by external factors.
Well, what a conversation.
What a conversation.
But that's the world that we are facing today. And we are trying our best, I can tell, everybody here in this panel, I'm sure also in the audience. So what can we say in conclusion? It's almost impossible in 1 or 2 sentences. So if I could just borrow the wisdom of every one of you with one word, even more abstract, what will that be? Remember our topic, China's economy, a big rebound, question mark. I'll leave Professor Zhu later, because every time I call on you first. So, Professor Kapchen, one word.
Do the right thing.
Okay, that's very much a one-word thing. Okay, do the right thing, Professor.
So, I would like to talk about the fear. We don't need to fear the new technology, but we need to control it, to make the control in our hand. Control the new technology and use it properly.
Yeah, maybe sophistication of applications. I guess that's probably what you mean in terms of translation. Yes, thank you. Professor Prasad.
Hope.
Good.
Well, is hope a strategy?
Good.
Thank you. Ms. Chan.
Human-centric, I think a lot of the thing, be it fear, be it training people and get them feel hopeful about the future, which is important for driving consumption. Human-centric policy is important.
Thank you. And Professor Zhu, one word or one phrase.
Yeah, brace the future, brace the structure change. Be confident.
my tremendous gratitude to our panelists on a challenging time, but an important question. Professor Kapchen, Professor Gong, Professor Prasad, Ms. Chan, Professor Zhu, what a pleasure, and thank you so much for your efforts. Our gratitude also going to the World Economic Forum for bringing all of us together. Thank you. Thank you.